Ladies and gentlemen, good day and welcome to the Q2 and H1 FY23 earnings conference call of Granules India Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Irfan Rain from Orient Capital. Thank you, and over to you.
Thank you, Yashashri. Good evening, everyone. Myself, Irfan Rain from Orient Capital. We are an investor relation advisor to the company. I hope that all of you and your families are safe and healthy. On behalf of Granules India, I extend a warm welcome to all participants on Q2 and H1 FY23 financial discussion call. Today on the call, I am joined by Dr. Krishna Prasad Sir, Chairman and Managing Director, Dr. KVS Ramarao, Joint Managing Director and Chief Executive Officer, Ms. Priyanka Ma'am, Executive Director, GPI, and Sandeep Nyogi Sir, Chief Financial Officer. I hope everyone had an opportunity to go through our investor deck and press release that we have uploaded today on exchanges and on company's website. Before beginning with the call, I would like to give a short disclaimer. This call may contain some of the forward statements which are completely based on our belief, opinion, and expectation as of today. These statements are not guarantee of our future performance and involve unforeseen risks and uncertainties. With this, I hand over the call to Dr. Krishna Prasad Sir. Over to you, sir. Thank you.
Thank you, Irfan. A very good evening to all of you, ladies and gentlemen, and thank you very much for joining us today. I'm sure all our investors had received the proceeds from the buyback by now and are happy that the company has the interests of the investors as a priority. All of you would have gone through our numbers and Sandeep will also take you through them. Let us only dwell on some key indicators. During the current quarter, we continued and improved on our performance on all fronts compared to Q2 of FY22 and Q1 of FY23. While net profit has grown, the most important and satisfying parameter is the cash position. We had generated operational cash of 218 crores as compared to 181 crores during Q1 23. After accounting for capex, we generated a free cash of 124 crores compared to 98 crores in Q1. As explained in our last call, our focus continues to be free cash and we will continue to focus on this. As of today, we had completed the buyback and had incurred an outflow of 310 crores, including taxes and other expenses. We are confident that after taking this amount and future capex into account, we will end up with a positive cash flow and reduce net debt by the end of the current fiscal year as compared to March 22. On the business front, while we continue to see price erosion in the US, we will continue to offset this through increased sales in other geographies and increased focus on operational efficiencies. This had been an ongoing issue for the past many years, but Granules had been able to successfully manage this. On the positive side, the slow downward trend in raw material prices is continuing, but the cost of energy had gone up, adding to our cost. The international freight rates, especially for reefer containers, had not reduced much during the last quarter, but we see a downward trend in Q3 already. The supply of PAP and DCDA, some of our important raw materials, had been stable and we expect it to continue and possibly improve. The political situation in Europe had caused disruptions in raw materials coming out of this region. But for us, we were impacted only on excipients. We are mitigating this by qualifying alternate sources from other geographies. Work on the DCDA project is proceeding smoothly and we expect to see results in less than 2 years. R&D is progressing smoothly and details of the ANDA filings, approvals, and DMS filings are in the investor presentation. While we continue with our current business model and keep trying to grow it, I am greatly excited that our journey towards Granules 2.0 is proceeding smoothly, and we are all excitedly looking forward to the positive outcomes from this. As usual, I request our JMD, Dr. Ramarao, to take you through this journey. Over to you, Dr. Ramarao.
Thank you, Mr. Chairman. Good evening, everyone on the call. I echo the views of the Chairman on a very satisfying second quarter performance of the company. In my last quarter remarks, I spoke about Granules' long-term strategy on science, technology, and innovation. I'm very happy to confirm that our strategy relating to this is on track. We made decent progress on the enzyme and the fermentation technology-driven product development and completed proof of concept for a couple of projects. We are also making good progress on the continuous process development effort and DCDA, and as pointed out by the Chairman, we should see the commercialization of this product in the next couple of years. The R&D and portfolio management strategies are much more robust now and are based on the initiatives of science and technology, and we have also made a very good progress in institutionalizing ESG as a way of doing business for us. All these science technology related initiatives are going to increase the R&D spend in the subsequent quarters. As also communicated in the last quarter, we see huge untapped market potential for our core molecules in Europe, South Africa, and AMEA countries. We have now started expanding in these markets. The first set of the European launch of some of these molecules through our partners is likely to happen during the quarter 3. With this, I hand it over to Sandeep for financial highlights.
Thank you, sir. Let me take you through the top financial parameters now. Revenue. The second quarter revenue was 1151 crores as compared to 888 crores in Q2 FY22, growth of around 30%. This growth is mainly attributed to increased business in the US, especially in the API segment. The revenue share of non-core molecules stood at 16%, which is higher mainly because of the increased core sales in the current quarter. Even though in percentage terms the others have decreased, but in absolute numbers showed a marginal growth. The sales breakup as per business verticals and regions are presented in our investors presentation, which is available on the website. Value addition, which is basically sales minus cost of material consumed. Value addition percentage in Q2 has contracted by 1.1%, mainly due to segment mix. As in this quarter, API sale was more. EBITDA and EBITDA margin. EBITDA for the quarter was 243 crores when compared to 151 crores in the previous year, same quarter, an increase of 61% over the previous year, mainly on account of increased business across major geographies. R&D. Our R&D spend for the quarter was 25 crores as compared to 47 crores in the same quarter in the previous year. It is expected that R&D spending will be in the range of 40 to 45 crores in each quarter going forward. Net debt. Our net debt was 553 crores as compared to 613 crores in the last quarter, mainly on account of repaying of the long-term debt. Our focus on cash collection has also resulted in free cash of 124 crores in the current quarter. Cash to cash cycle. Our cash to cash cycle was at 141 days in the current quarter compared to 144 days in the previous quarter. The decrease of 3 days was mainly attributed to a reduction in the receivable days due to factoring of invoices. Operational cash flow. Operational cash flow for the quarter was 218 crores when compared to 101 crores in the previous year's same quarter. Higher operating profits and a focus on working capital management contributed to higher operating cash flow in the current quarter. CapEx spent during the quarter stood at 94 crores. With this, I open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Rahul Veera from Abacus. Please go ahead.
Hi, sir. A couple of questions from my end. Just want to understand, is the gross margin on...
Mr. Veera, you're not audible, sir. Can you please speak louder?
Am I audible now?
Yes, please go ahead.
Yeah. So just want to understand that is the gross margin on paracetamol lower than the other products? Because sequentially when the sales have gone up in paracetamol specifically, is that gross margin is not up to the mark, you know?
You're right, Rahul. Gross margin on para is lesser than other products.
Okay. And was there any one-off in this paracetamol sales in this quarter? Or we are seeing this kind of traction going forward as well?
No, there is no one-off, Rahul. Actually, basically the whole thing came from availability of raw material. Now that supply of PAP has stabilized, we see this going forward. Market was not a problem for us. We had marquee customers and they continue to be with us.
Sure. And so if given the incremental sales from paracetamol, and that too from US, the percentage of sales has increased sharply. But we were targeting to penetrate more markets like European or even the Latin markets, right? So how will this shape up now? How will the ratio move now?
You mean paracetamol in US compared to other geographies? Was that your question?
So if paracetamol in US increases sharply, compared to other geographies?
No, we have some marquee customers in the US, and also we are trying to convert most of them from API to finished dosages. And also, our European launch of paracetamol formulations is happening now in this quarter, Q3. So there will be increases in both segments, but I think US will be a higher share for paracetamol.
Okay. So, sir, any other contracts or large key customers that we would have added in the past couple of quarters?
No, I think no, I don't think so. These are customers who have been with us. With increased wallet share, we are getting with them.
Okay. And sir, what will be the capacity utilization of our plant for paracetamol as of now?
Paracetamol is around 90%, 95%, around between 90 and 95.
Okay. Fair point, sir. I'll come back in the queue, sir.
Okay.
Thank you.
Thank you. We have our next question from the line of Krish Mehta from Enam Holdings. Please go ahead.
Thank you for taking my question. I just had a question to clarify on the finance costs, given that the debt has come down. Could you explain what contributed to increasing the finance cost for the quarter and what the blended cost of borrowing was?
I think Sandeep, we should take that.
Yes. So finance cost has increased actually for everybody because of the SOFR rate has increased. So when we started the year and where we are seeing the SOFR now, there is a 3.5 to 4% increase in the SOFR, and that has resulted. The spread has not increased for any of us, but SOFR rate increase has actually resulted in a kind of cost of borrowing being higher.
And how would you view the finance cost over the next few quarters? As you know, when debt comes down, how do you view the mix changing?
See, we do not see that the SOFR is coming down drastically. If the SOFR continues at that level, we can only assure you that the spread will not go up. So obviously it will be in the same range.
Okay, thank you so much.
Thank you. Reminder to participants to press star and 1 to ask a question. We have our next question from the line of Ashwini Agarwal from Demeter Advisors LLP. Please go ahead.
Hi, good afternoon, team. Thank you for taking my question and congratulations on a very, very solid quarter. So a couple of questions. I mean, last, say, 6 to 8 quarters have been unusual in many ways, right? First, we saw very high margins because of COVID-related shortages.
Sorry to interrupt. Can you use the handset, please?
Yeah. Is this better now?
Yes, please go ahead.
Yeah. So my question is...
Ashwini, sorry, there's still an echo. It feels like you're on speaker. So we're finding it a little difficult to hear you.
Let me come back. Madam, can you take the next question?
You're clear now.
Okay. So what I was saying was that I'm trying to figure out, the way forward. Last 2 years have been very challenging for the company because first we saw excessive one-off gains because of COVID-related shortages, especially in metformin and excessive demand for paracetamol, and then we saw product shortages and shipping costs coming down. Now, at least on the raw material shortages and shipping costs, things are normalizing. The FD contribution to overall revenues has also gone up. And we are kind of right-sizing the sales across various geographies. So if I look at the long-term history, value addition has been more or less around 50%. And if I look at the long-term history, again, EBITDA margin has been, in the region of about, say, 21, 22% in some years, but on the lower side, it's been 16, on the higher side, it's been 26. Over the next 2 to 3 years, where do you see gross margins and EBITDA margins stabilizing at, given all the initiatives you're taking?
Okay, Ashwini, first of all, let me say, like you said, 21 and 22, both are aberrations. 21 was a positive aberration, 22 was a negative aberration. And 23 is start of returning to normalcy. So, but due to uncertainties today in the world, I'm not able to say how much improvement we'll make. So, I don't see any possibility of deterioration, any normal possibility. But in this uncertain world, we don't know where we will go. So I think we should be going with an EBITDA of, I always said we'll be slowly creeping up from our 20%. So we crept a bit, and year on year we'll definitely creep up, and our target is to get to 25%. And when it comes to value add, the situation is, it's the product mix that always dictates. So we are going towards high margin products, but all these things will be visible only after 2 years onwards. Like I said, it's Granules 2.0 which is going to transform the company, and there we will definitely see higher margins. Meanwhile, we continue to face and mitigate the challenges that are occurring in today's world, especially price erosion in the US, and disruption of supply chains in different parts of the world. Initially it was China, now it's Europe. So there are many mitigations that are going on. So I cannot see gross margins going up, but definitely once 2.0 takes place, we will definitely see a great upside. And we are all looking excitedly for that.
Okay. So on a more specific basis, could you quantify the size of savings that are possible on shipping rates?
All I can tell you is we were as high, I'll just give an example for a reefer container. Prices were as high as, I would say, $12,000 to $13,000 per container, Q1. Q2 it came to around 12. But this quarter we already see 8.5, 8. And looks like they're still going to possibly go down.
And pre-COVID, these rates were at what, 3.5? Would that be a fair guess?
No. The reefer container would have been around 4 to 5.
4 to 5. Okay. Okay. And would this kind of offset the R&D expense pickup? Because R&D has obviously helped the EBITDA margin in the current quarter, but R&D will normalize over the next 2 quarters, as you suggest. So will lower shipping costs kind of offset the R&D headwind?
Yeah, there are a few areas where we see savings coming in, and definitely freight cost is one. If we see in the second quarter, the freight costs have drastically played a very important part of our cost. So freight is one, and there are a few other areas where we see which will offset the R&D expenditure.
Okay. All right. That's all I have, sir. Congratulations once again.
Thank you.
Thank you. We have our next question from the line of Rashmi Sancheti from Dolat Capital. Please go ahead.
Yeah, good evening, management, and thanks for the opportunity. I'm audible, right?
Yes, Rashmi.
Yeah. Okay, sir. So first, I want to know about US, related to the price erosion. In the first quarter, you all mentioned that, Granules is facing high double-digit price erosion. So what is the current status over there, whether, it has really come down or not? And how many new launches have we done in first half? And if you can quantify, out of those new launches, how many new MUP technology launches we have done from Gagillapur?
I think it's good that Priyanka takes up this question. Priyanka?
Sure. Hi. To answer your first question, in terms of price erosion, there is still quite a bit of price erosion that we are having to deal with. But the good news is that it's not as drastic as high double digits right now. So the market is slowly beginning to stabilize, but we are positioned and we are positioning ourselves to make sure that we don't lose out on market share because of price alone. In terms of the number of launches from MUPs, we've done 2 launches in Q4 of this past year, and we have been increasing market share and winning more awards for those 2 products. Outside of those 2 products, we will be launching a few products in Q4 of this fiscal and Q1 of next year with MUPs. In addition to that, we did one more controlled launch, a controlled substance launch from the US facility.
And how many would be total new launches, which include MUPs and the other products in first half?
We did about 3 launches the first half, and going forward in the second half, we'll be doing about 1 to 2 more launches, and we haven't reached our target market shares for these 3 products yet. So we will be aggressively bidding on these products as well.
Okay. And what about metoprolol succinate approval? We had some query on it. Have you responded to the US FDA, or what is the current status over there?
Rashmi, you seem to be knowing more than us about what's happening.
Pardon, sir?
You seem to be knowing more than us about what is happening.
Okay.
No, I don't think we should do that. Go ahead, Priyanka.
Everything is going on track, and we should be able to launch it as planned.
Okay. All right. And related to the paracetamol, the revenue mix has gone up, in this quarter. We should take this as a pent-up demand because PAP has stabilized, or we are, based on some order visibility and all, we believe that paracetamol revenue run rate would be higher, in the second half as well as in FY24 also.
The same trend will continue, Rashmi. It's not a pent-up demand. People were waiting for us to come back on track. And it's also, like I always said, we cannibalize on other markets, other suppliers. So it's a shift from some other supplier to us.
Okay, understood. And lastly, sir, can you give some direction in terms of revenue growth for API, PFIs and FT? Because this quarter we have seen some extraordinary growth, and even first half, the growth is extremely high, especially in the API as well as in the PFI segment. I mean, would first half would reflect similarly in the second half, or we think that, there would be some lower growth which would be due to the season or something in the second half?
No, we could see some improvement in the second half, but mainly, Rashmi, it's not the revenue that we are looking at, and it's not even the bottom line, it's the cash that we are generating. So, of course, without revenue, without bottom line, we cannot get the cash, but it's also a product mix and what business to take, what business not to take, that determines the margins. So, definitely, we will be improving on our cash position and bottom line. So let's not focus too much on gross margins. On revenues.
All right, sir. Thank you. That's it from my side.
Thank you. We have our next question from the line of Varun Basrur from Julius Baer Wealth Advisors India Private Limited. Please go ahead.
Yeah, good afternoon, sir. I hope I'm audible.
Yes, sir, Varun.
Yeah, hi. So a couple of questions. First is, what percentage of the finance cost in this quarter is attributable to factoring of receivables? And the second question is, of the cash-to-cash cycle, what percentage or what kind of inventory of raw material inventory are we keeping on hand?
Any other question, Varun, or is that it?
No other questions.
Sandeep, you want to go ahead?
So, factoring cost is around 40% of the total finance cost for this quarter. And regarding the inventory, sir, you may want to...
The inventory days, I don't have just the raw material number with me. It's the total inventory, which includes inventory here on the sea and also in the US. Last quarter we had 179 days as compared to 182 days in the previous quarter, and receivable days have come down. It was 74 from 83, and payable days also have come down from 121 to 112. So overall the net effect is 3 days on cash to cash cycle. And again, let me just clarify a bit, Varun. When Sandeep said 40% is the cost of factoring, if not we factored, we would have had to take some working capital debt, and the difference is not much. Between factoring cost and the working capital PCFC, it's a marginal difference.
Understood. Yeah. Thank you.
Thank you. Ladies and gentlemen, in order to ensure management is able to answer all queries, kindly restrict your questions to 2 at a time. We have our next question from the line of Maitri Pari from Pi Square Investments. Please go ahead.
Yes, sir. So I have two questions.
We are not able to hear you.
Can you hear me now?
No, your voice is breaking.
Just a minute. Yeah, can you hear me now?
Yes, please go ahead.
Yeah. So my first question is that, what is our market share in paracetamol domestically and, globally, if we have the number?
I don't think we can give out that information, Maitri. It's a little sensitive with competition, and we prefer not to discuss this in an open forum.
Okay. The second question is that, what is the revenue concentration of the top 5 customers?
Top 40. I think it should be around 30 to 40%, Maitri. A little more than 30, I would guess. Okay. I don't have the number offhand with me.
Okay.
But I can definitely tell you top 20 customers will not be more than 60%.
Oh, that's great. Okay. The third question that I have is, that is the raw material that we import. So what is the percentage of total raw material that we import, and from which countries do we import?
Mostly we import from China and Europe, a little bit from US also. US maybe about 10% of our total imports may be coming from the US. And overall, our imports should be about 30% of our revenue.
Okay, 30% of revenue. Okay, no issues. And how much are we dependent on China? I mean, if there's some problem and if we are not able to import from China, do we have the alternative?
Yeah, the two materials we import from China have been DCDA and PAP. And now PAP, there was a shortage in China that's streamlined now. We also have Indian manufacturers and other international manufacturers who have come up. So there's a lot of mitigation that has happened. And we don't see a very great challenge on this product. On DCDA, we have one supplier out of Europe. So now with the costs of energy going up in Europe, they're not very economical. Now China is economical. So basically, if you say DCDA, we are still quite dependent on China. And again, to add to this, the whole world is dependent on China for metformin, for the intermediate of metformin. No other country makes this except one company in Germany.
Okay, no issues. I think that's all from my side. Thank you.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of Tushar Bora from MK Mutual Fund. Please go ahead.
Slight correction. It's MK Ventures. Thanks for the opportunity. And congratulations to the management for an excellent set of numbers. So a couple of things. I wanted to understand about some of the new initiatives. So, details around the hypo and onco plant, and also, the biologics asset that we acquired. If there's clarity on the strategy regarding biologics as a whole going forward, as well as some of the other work that we're doing under Granules 2.0, if you could sort of explain in more detail.
I think this is a question for the passion of Dr. Ramarao, but he'll be able to speak better.
So I think, as I mentioned in my speech, we are focused on the high potential this oncology block and hypo block. I think earlier also we indicated that we are going to focus on the oncology formulations, and as discussed, and the progress is in the right direction. We are able to see a good traction with the customers in terms of business development deals, and also how we can use the capacity utilization there. So I think it is going in the right direction as far as the hypo block is concerned. Coming to your second point on the entire enzyme fermentation and what R&D assets and capabilities that we have got, we are able to really foray ourselves into enzyme-driven product development, and we have done a proof of concept of a couple of products, and we seem to be quite happy in the direction in which the results have come, and very soon we will see this getting commercialized through our enzyme and fermentation technology route into the API manufacturing. So I think as a part of the strategy, what we started in the beginning, as explained in the first quarter, we continue to have this journey, and we have made sufficient progress to see that the strategy is now started, into the execution mode. And definitely, fermentation enzyme is much ahead of ours. And also on the continuous process development, we have started looking at a couple of products, and including DCDA, and as Chairman has pointed out in his speech, and as I also told, in the next couple of years, we should be able to come out with a commercialization of the continuous process development of this molecule, and we are also looking at several others. So suffice it to say that the strategy that we are now calling it as Granules 2.0 has taken off, both in terms of execution of the products, projects, and also reshaping our portfolio as a long-term strategy for the organization.
Thank you. As a follow-up to this, also on the MUPS side and some of the complex generics, we've been filing last 4 years, and pretty much last 2.5 years, we've got a number of approvals in place, which we've steadily been launching in US markets. Just want to understand as a execution where we are vis-a-vis, what we were envisaging this portfolio to be, And how soon can we see real traction in the other molecules, such that it starts to become a much more meaningful percentage of the total?
Tushar, some of the very important filings which we have made are yet to be approved in the MUPS area. Like Priyanka said, we will see some in Q4 of this year and some in Q1 of next year. So those will be decent products. Meanwhile, we have some products which have been approved and we are steadily launching them. And the strategy of going slow, I think it's better we hear it from Priyanka.
Hi, Tushar. So in terms of going slow, like we've always said, Granules will continue to focus on maintaining and gaining market share with a certain our threshold of profitability in mind. So in the US market, with an increased amount of competition for all the products, our first goal is to maintain security of supply and to slowly but steadily gain market share, which involves a little bit of patience and making sure we have a certain amount of inventory ready to go at any given point of time. So if we have to get to a certain a large market share, the only way to do it overnight is to cut down the prices drastically, which is not what we plan on doing. So, like I said, we are in the third quarter of gaining momentum for two of the current products from the MUPS block in India, and we continue to gain market on those two products where customers themselves have reached out to us saying, your competitors are not able to supply, can you do it? So with that, we're able to make sure that we set our value proposition right in the US market, and that's where we want to be as a company. Going forward, we'll be doing the same with all the MUPS products coming out of this side.
Great. There was one point raised on metformin, I think on DCDA on the supply side, some issues. I see overall metformin has been slightly flattish for us last couple of quarters. In fact, even this quarter, YOY, we are flattish. Is it something that, we are, due to supply security or supply-related concerns, we are not able to fully leverage the potential? I mean, or do we see this as a transient phase and we should be able to grow back in metformin aggressively?
Yeah, Tushar, in the US, we already have a decent share, and I don't think we should try to get more share at the cost of margin. So, like Priyanka said, we are going slow. We expect to maintain our margins. There's price erosion. We can give in some, but we cannot give too much. So we would like to stabilize that rather than increasing market share at low margin. But other geographies, we have just started launching. This quarter, we are launching paracetamol products in Europe, and possibly next quarter, we should be launching some metformin products in Europe and other geographies in the form of formulations. So this should keep growing. But it won't grow at a very rapid pace. Europe is still virgin, but we'll do well.
Okay.
Mr. Mohan, I request you to come back in the queue.
Sure, will do so.
Thank you. We have our next question from the line of Kaushik Mohan from Ashika Group. Please go ahead.
Hello, hi sir.
Hi Kaushik.
Hi sir. Sir, I just wanted to know on the PAP side, sir, do we buy PAP from India?
Yeah, we do, Kaushik.
So is it from, can I know the supplier? Is it from Sadhana Nitrochem or something like that?
Not from Sadhana, that much I can tell you.
Okay. So what is the Indian prices that we buy, sir?
Prices are almost the same, competitive everywhere today. There's a surplus product. It's almost the same.
So it is as equivalent as the US?
China.
China. Sorry. It's as equivalent as China.
Yeah, a little bit here and there. They vary, but more or less.
Okay. So how about what is the strategy for us for paracetamol in Europe? How are we going there in Europe?
We sell a lot of paracetamol API and PFI in Europe, and we also do some contract manufacturing of paracetamol tablets for certain customers, including some brands. But right now, we are launching our own dossiers along with partners. We filed for some products, and this quarter we will launch in 2 countries.
Sir, is there any changes in paracetamol because of the quality of PAP?
If the quality is bad, product is bad. The quality of PAP is not bad, it's fairly decent. It's of the same quality. We had some problems with one or two new suppliers, but we worked with them to make sure the quality comes out well.
Okay. So there is a new evolution in this PAP, right? It's nitrobenzene route. How about, do we buy the PAP in that route or in any other format of PAP that we are buying?
Nobody makes it from nitrobenzene today for sale in the market.
Okay. Thanks. I got it. And happy Diwali.
Thanks, same to you.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of Maulik from Anand Rathi. Please go ahead.
Yeah, good evening, sir.
Good evening.
So our sales have grown on the API side and mainly from the paracetamol side. So just wanted to know that is it because of increase in realization of that product or due to increase in volumes of that product?
It's actually volume. I don't know if you were here in the call right from beginning. We mentioned that we have availability of more raw material and that has led to increased production and increased sale.
Oh, okay. Sorry, I would have missed that. Okay, sure. Thanks a lot, sir.
Thank you. We have our next question from the line of Suresh Agarwal, an individual investor. Please go ahead.
Good evening, sir. Good evening.
Good evening, Suresh.
What's our dividend policy, sir?
Suresh, you know the amount of buyback we did. We will give it back in the form of dividend or buyback, whichever way. Our priority is to make sure the investors are benefited. And if you calculate the amount of money that was given, you can understand what we are planning to do.
This line is disconnected.
Okay.
We'll move on to the next question from Ashwini Agarwal from Demeter Advisors LLP. Please go ahead.
Hi, just a follow-up question from me. I'm referring to your opening remarks where you said that notwithstanding the buyback and the planned capex, you still expect to generate free operating cash flow, which will be used to reduce debt. And considering that, the value addition margins and EBITDA margins are likely to be steady, that kind of, hints at very strong second half in revenue growth. And I just want to understand what's driving that confidence.
It's mainly going to be a working capital management, Ashwini, and it's working with our customers for quicker payments and reducing the receivable days. So, and also we are working with our suppliers to increase the payable days. And inventory is a very cautious approach we are taking because if you don't have enough inventory in the US, you could end up with failure to supply penalties, which could be disastrous. So that's a we need to really study this, but we are very cautious on that. So to answer your question once again, to sum it up, it's mainly reduction of receivable days and increase of payable days. And also, inventory, raw material inventory in India, we could possibly reduce, but not the finished product.
Okay, so essentially working capital is going to get a lot tighter in second half. That's going to be
all our money, our conversion of operational profit into operational cash was not great in the past because all our money was getting sucked into working capital. And we were really, our borrowing was so low, the cost of borrowing, we felt it was okay to, at one point of time it was only 0.6% before the SOFR went up. So we didn't really bother, but now we thought the focus has come on cash and cash alone, so we thought let's get the cash in.
Okay. Thank you, sir. That's helpful. Thank you and all the best and happy Diwali.
Thank you, Ashwini. Happy Diwali to you too.
Thank you. Reminder to participants to press star and 1 to ask a question. We have a question from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
So just one question on the overall investments into onco, hypo, and biologics assets till date, and how much do you intend to invest maybe in FY 23 and 24?
Onco investment is 90 crores, and for this biotech company, we have only invested 13 crore.
No, going forward.
Going forward investment.
No, we have already given a guidance for this year and next year is going to be 300 crores each.
But not in these two.
So, we don't expect to invest anything in the onco plant, but on the biologic side, we'll definitely be investing. And after this, the investments could be higher after this year, next year. We'll see what it turns out. But this year, next year will be 300 crores each.
Very much, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. As there are no further questions, I would now like to hand the conference over to Dr. Krishna Prasad for closing comments. Over to you, sir.
So, ladies and gentlemen, once again, thank you very much for joining us today. And I would like to reiterate that we are working hard to continue the run-up just like we had in Q2, and we will strive our best to make sure that we continue to grow profitably. So thank you very much.
Thank you, sir. On behalf of Granules India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.